Greetings, all. Thanks for coming by, checking in. Hope all is well. Getting ready to watch UConn tonight. I don't know. I'm not really not that into the NFL anymore. Yeah, I don't even care if I watch the Super Bowl because, frankly, I wish both teams could lose. All right, well, that's neither here nor there. And second of all, why is Spider-Man on my site? Well, we're going to go look through the S&P 500 depository receipts, which I guess somehow evolved into the term spider. When I first started doing this, it was hard to track individual sectors because they didn't really have published indices. You had to pay for them. But now we can look at the ETFs that track the different sectors and see what is going on with the different sectors. And by the way, I mean, Spider-Man, I don't know, the Flash. Like, what does the Flash have that Superman doesn't? I mean, I'm sure Superman could outrun the Flash. Superman could like breathe underwater. The Green Lantern, Aquaman. Like Aquaman, you just didn't even just leave the water, and there's nothing he could do to you. So it's basically Superman, and that was it. Period. And I was watching one of the old Supermans from the '50s, and it's like Superman like intervenes to save some guy from getting fired at his job working at a mine, and then 50 years later, it's like he's flying around the Earth, turning the world back in time, or turning time back. All right. So anyway, so blah 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 blah. Big interest rate today. Nothing or announcement today. No surprise. Market's really kind of dead in the aftermarket here. Nothing's really going on. So I just want to point out we found the resistance at the former resistance level. We talk about that a lot. Now, at different times, different sectors are in control of the market, right? These little guys are never really kind of in control because they're just too little. Consumer staples, sometimes you can get signals from because sometimes money flows into consumer staples before the rest of the money market goes down. It's your classic flight to safety. But then you got these guys, industrials, communication services, healthcare, and of course, mostly, tech. Wow, look at that. Healthcare was the second biggest sector up until about, I don't know, maybe a year ago. So we're going to see what's in charge. I think it's still financials, but let's take a look. First thing we're going to do is look at the tech sector. It was pretty interesting action when that news came out on Nvidia that made it go down because it went down, but the money that was coming out of Nvidia went into the other big two, Apple and Microsoft. So it was kind of a weird, speaking about flight to safety, like that's kind of what was going on. All right, so tech once again resistance at resistance levels, right? Buyer's remorse, people buy, goes down. They're like, oh, when it gets back to my price, I'll sell if I get out of break even. Down here, you have support. This is seller's remorse. People sell, goes up, like blah, 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 blah. If it gets back to my level, I'm going to buy my shares back. So remorseful buyers can keep resistance intact. Remorseful sellers can keep support intact. But to me, just looking at this as the perspective of a trader, it's in the middle of a range, pretty neutral. I don't think that this is going to have an impact on the broader markets. Remember, we're trying to think about what the S&P is going to do here. So now let's go over to the healthcare sector. All right, perfect example, right? Running into resistance at a former resistance levels. I mean, you don't need to be a chart guru to see that. I mean, if you think about how big the healthcare sector is, the fact that we can come within pennies of where resistance was before. People that don't believe in technical analysis just haven't learned from the right person. So tell them to sign up. All right, I made up my mind. I'm going up to $50 on February. I don't know. Do you guys think I diminished myself because I offered out for too cheap? I mean, I'd rather have like fewer students pay more than more students pay less. Like, I don't want to be McDonald's. I'd rather be like a nice steakhouse. That way I can talk to you all and answer your emails and so forth. But anyway, going back to this, I mean, look at that. It's incredible. On this day, the open price was $146.94. Yet the other day's closing price, $147.55. We're talking about fractions of basis points on a sector that's worth trillions and trillions of dollars. So this will probably be consolidating here, I guess. We talked about this the other day. Like if we thought it was going to break out, that would bring the S&P up, but it didn't. So this is one of the reasons why it's going sideways. All right, now I'm going to go to consumer discretionary. I would generally go to financials, but I think financials are the most important thing to watch. So I'm going to wait. Yeah, look at that. I mean, this has just gone flat. And I think Tesla reporting? Who knows? Oh wait, maybe it is. Let's see. Let's not. Let's go to industrials. All right, now wham, right? Wham, bam, right there is potential trading ideas. Testing an important support level, or what could be supported with support back here. All right, I think this is what it all comes down to here is the financials. I mean, they're kind of tightly wound right on an important price level. When things get to important price levels, they don't hang out for too long generally. They go one way or the other. So I would say that the financials have been in the driver's seat of the market. So I think if there's like one thing to really watch, it's here. Let's see what's going on with consumer staple sector. Yeah, not too much of a sign there. I mean, it's kind of looking like we're going to be going kind of sideways ish. Materials. Here's kind of an example. Look at that level that was support here. Oops. Resistance over here. Once again, I mean, look at that. It's like so clear. You can even see up here. Like, look at that. Resistance became support. If you know what levels are the most important ones to watch, well, it's like having a map to the market. It's like your map to wealth. All right, let's look at real estate. These little guys don't really generally influence the broader markets, but it's good to look at them because they could always give some trading ideas. I mean, look at that. Resistance becomes resistance. Reading charts is about understanding human psychology. If you look at this from the view of, I don't know, some sophisticated quant thing or AI thing or a fundamental thing, there's no logical reason why this particular sector would have the same exact valuation on September 16th as it did on November 27th. But if you're a trader and you can understand that this stuff is driven by psychology, it's easy to comprehend. Utilities, look at that support within like pennies of each other. And what am I missing? Oh, energy. Let's take a look at energy. Yeah, now energy is pretty interesting because I like to watch this ETF, the DBY. Oh, I'm sorry, the DBC. Oh, I'm sorry again, DBA. That's what it is. This tracks a commodities index, and there are signs of inflation there, and it's kind of interesting that this is going up even though oil has been going down. All right, anyway, just to kind of sum it up, I think we really got to watch the financials this week. I think the signal for what is going to happen in the broader markets is going to come from here. The financials are in the driver's seat. In other words, financials go down, the broader markets will probably follow. Financials go up, the broader markets will probably follow. I mean, it's not an exact thing, but that's why we call it an art and not a science. And thanks, everyone. I will see you soon. I appreciate it.